Hey, how's it going, guys? It's your boy XO, and in this video, guys, I'll be showing you guys how to trade and understand candlesticks like a professional, guys. So in this video, I'll be showing you guys how to trade high probability setups and how to understand every candlestick in the forex market like a professional, so that you can actually spot and trade very high probability trading setups. Because if you get to understand how all this candlesticks is formed, if you get to understand the psychology and the reason behind all these candlesticks, as you can see, this is a weak candlestick, this is a strong candlestick. If you get to understand the reason why this is a strong candlestick and why this is a weak candlestick, the reasons behind it, then you can actually take a very high probability trading setups. So that's what I'll be teaching you guys in this video. So I hope you guys stay to the end of this video, because there'll be a lot of golden nuggets I'll be dropping in this video. So guys, stay in and don't click off this video, guys. And if you want to take your trading to the next level, if you want to be a professional trader, there's something I will tell you to do now, and which is go and smash the like button on this video and subscribe, turn on notification, guys, because you have 10 years of trading goodness. Like, you will take trades for 10 years and not lose. So hit the like button, subscribe, turn on notification, and share this video with your friends and get 10 years of trading goodness. Let's get started into this video. I'll show you guys a real life example of how this candlesticks looks like in the forex market, so you guys get to understand it, because I might show you what it looks like on my Excel sheet, drawing open and close of a candlestick, but you're coming back here and you see something different. So I want you guys to really understand and get this dialed in into your mind. So guys, let's understand what bearish and bullish candlestick means. So guys, I'll start with the bullish candlestick. So the bullish candlestick is when the close of the candlestick is higher than the open. So guys, this clearly means that as you can see, this candlestick actually opened right at this point and closed right at this point. So this clearly means that this is a bullish candle, because the close is above the open of this candlestick. And the same goes for a bearish candlestick. The market opened at this point and closed at this point. So this bearish candlestick means that the close of this candlestick is lower than the open. That is a bearish candlestick. Even looking at this one, these are two big bodies, so let's see the smaller bodies. So this clearly means, you can see the market opened just down here, went all the way down, came back up, and retraced back and closed there. So this clearly means this is a bullish candlestick, even if it's a weak candlestick. This is a strong bullish candlestick, and this is a weak bullish candlestick. And the same goes for this one too. You know, the market opened at this point, probably went up and retraced back down and closed there. So because it's this weak, doesn't mean I'll call it a bullish candlestick. It ended up being red and obviously closing below the open of its section. So this clearly means this is a bullish candlestick. And guys, you have to take note of the time frame, which is, this is the 5-minute time frame, which means for every candlestick on this chart, for every single candlestick, even the bigger bodies, which is the strong candlestick and the weak candlesticks, are all 5-minute candlesticks. So because this is a small candlestick, doesn't mean it should be a 1-minute candlestick or a 4-minute candlestick. All this candlestick you see right on this chart, guys, is a 5-minute candlestick. So guys, I didn't want to draw a PowerPoint slide and all this fancy stuff. I just want to show you guys what it looks like on a chart, real life example, guys, not me showing you a drawing and sketch on my Excel. So guys, there's 4 main things every candlestick you see right here is actually trying to tell you, which is the open price, which is here for this bearish candlestick, the open price, the close price, the highs, and the lows. So guys, this should be a great example, which is the open, the close, the highs, and the lows, which is this wick right here. So guys, this is the high of this recent candlestick, the highs of this recent candlestick on the 5-minute time frame. This is the lows of this candlestick on the 5-minute time frame. This is the open and the close of this candlestick on the same 5-minute time frame. So you guys need to understand that you're actually looking at a specific time frame, which is 5 minutes or 1 hour or 30 minutes, depending on the time frame you want to use. Then you guys need to understand where you are on the chart. So guys, I've seen a lot of people use different colors on the charts. Some people use like green and red, some people use black and white, some use blue and red, some use gold and blue. So it all depends on your preference and how you like to see the chart and what your taste for colors on the chart is. So I like to just stick with the basic green and red because I'm already used to seeing the bulls as green and the bears as red. As you can see that this candlestick is way stronger than this candlestick. So let me explain what this candlestick actually means. So this candlestick means that there's a lot of strong selling pressure in this market. All right, I think let's say the market opened at this point and possibly the bulls pushed the market up, but unfortunately the bears came in and smashed the market down and came down all the way to this point. Then the bulls came in again and pushed the market up to this level. I think the market is closed right now, so it's going to be open again, but you guys get the point. So every candlestick you see here is actually a combination of psychology of every trader in the market. So the market opened, went up for a bull, like the bulls came in, stepped in, then the bears stepped in and pushed the market down, then the bulls came back in and pushed the market up. So every week you're seeing here, like this one, it clearly means that the market opened at this point, possibly went down to this point because the bears came in. I'm thinking like there's a level of support at this there's a level of resistance at this point, which made the market maybe went down initially. Then the bulls stepped in and pushed the market all the way up to this level and retraced back to this point, and the market closed above its open for a bullish candlestick. So this candlestick, this wick you guys see right here, this strong wick, is actually indicating a strong selling pressure. So it actually means that there's indicating that there probably might be a lot of bears in, so which actually led to the market falling down at this point. So you guys need to understand that everything in the market actually has a reason. All right, you can see this candlestick right here. It all depends on the context of where you're seeing this candlestick. So guys, this candlestick actually means a rejection, a strong buying pressure, like a strong buying rejection, and it also means a strong selling presence because the market actually opened at this point, then plummeted down and crashed down to this point. Then the bulls stepped in and pushed the market up. So this clearly means that there are some sellers in the market, but unfortunately the bulls stepped in and pushed the market up and it's closed above its open. So this clearly means this is a bullish candlestick. So as you can see, the market fell down because there was a selling presence at this point. The market fell down and came all the way down to this point. So guys, I want to show you guys this candlestick, which is this one right here. This candlestick is actually a doji candlestick because the highs and the lows are equal, and it's not that even strong. It's a weak equal highs and equal lows, and you can see the open and close. Of course, this is a bearish candlestick, but in the forex market we like to call this an indecision candlestick, which means the highs and the lows are equal and yet this small, and the selling pressure and the buying pressure are equal. So there's really no one winning on this point, but of course this is a bearish candlestick. That doesn't mean that the market is going to fall down because it's a bearish candlestick. It's just a sign that there's an indecision in the market. No one is winning, and you need to be careful. All right, so I would not say like doji candlestick is one of the candlestick that I really don't like to trade, because seeing an indecision in the market, I just stay away and wait for my own trading setup. Okay guys, so let's look at some candlestick trading patterns, and one of my most favorite candlestick trading patterns is actually the engulfing candlestick pattern, which is this candlestick pattern right at this point. As you can see, this candlestick pattern, so you can see that, guys, this candlestick closed below this candlestick. All right, it engulfs, like you can see, this is a clear engulfing, like this candlestick closed and engulfed this candlestick right at this point. So guys, this is a clear trading. Like, if you guys watch my previous videos, you guys see that I like to take an engulfing candlestick as my entry signals, guys, because like I said, if you understand price candlestick patterns, it is going to change the way you trade, guys. Indicators are actually lagging, but price action cannot lag, because it is what is happening in the market. Like at this point, if you see an engulfing candlestick at this point, it clearly means this is what is happening right now in the market, compared to an RSI, which is a lagging indicator, but price action is not a lagging indicator. So guys, you guys need to understand price action, because it's going to change the way you trade, regardless of the kind of trader you are. Even if you're a scalper, a day trader, a swing trader, a position trader, it is going to change the way you trade. And I want you guys to really get this thing dialed in into your brains. So guys, as you can see, this is a bearish engulfing pattern, and this one right here is a bullish and engulfing candlestick pattern, because as you can see, it is a bullish candlestick that engulfed the bearish candlestick, which means it's a bullish engulfing candlestick. A bearish candlestick at this point engulfed a bullish candlestick, which means this is a bearish candlestick. So guys, and usually for a sell, you need to use the bearish candlestick, bearish engulfing candlestick, and for a bull, which is a buy, you need to use the bullish candlestick. You don't sell when you see a bullish candlestick, and do not buy when you see a bearish candlestick. All right. So guys, there are other types of candlestick patterns apart from the engulfing candlestick pattern, but guys, I can't find all of them on this chart right now, so I will just show you guys the ones I can see. This is a morning star pattern, which is a sign of the market will go up, which is a bullish entry kind of pattern, which means when you see a morning star pattern, you will take a trade for a buy, and when you see an evening star pattern, just reverse this candlestick, right, turn it around. I might pop a screen here showing you guys what the evening star pattern looks like. So there's a lot of candlestick pattern. There's the dragonfly doji pattern, there's twisted top, there's twisted bottom. I just can't find them on this chart. I want to show you guys real examples, but I have to just use pictures of. Okay, I think I can see a twisted top. Okay, no, this one's low is lower than this low. So guys, I will pop a picture on the screen showing you guys what the twisted top, the dragonfly, and the engulfing candlestick, what they all look like in picture form, not in the chart form, so you guys get to see it, so you guys get to understand it, and if possibly you see it in the forex markets, you can, in the forex and stock market, then you can just take the trade. But guys, do your own due diligence, guys. Do not just take trades blindly of these patterns. You're gonna lose, so you have to add it in confluences with your other patterns, so it gets a higher probability chance of winning, and not some random candlestick pattern, just taking trades off, engulfing, and so on and so forth side. So as you can see that I added this 200 EMA line on this chart for since we started this video. So this indicates that this is a selling, like a downtrend, because if price is above the 200 EMA, it means that the price is in a downtrend. So I'm looking to take sells, and let's say I see an engulfing candlestick pattern and I take a trade. You can see an engulfing candlestick at this point too. So let's say I take a trade for a short at this point. My stop's just above this previous structure, and I take a 2R. So guys, you can see that this was a win, even if I take a trade at this point as well, and my stop's just above this highs, and I take a 2R. You guys see that we won this trade as well. So you guys always hear this saying that you need to trade with the trend, which is what I did at this point. I traded the engulfing candlestick with the trend, which is the downtrend. So I hope you guys enjoyed this really quick candlestick pattern video. Hit the like button, subscribe, turn on notification, and share the video with your friends, and get 10 days of trading goodness. Let's get started into this video.